in yesterday's video, check it out. I talked about the flying the ointment for the dollar high, and we're going to follow through on those flies, talking about Canada taking out the highs. I think we'll trade 145, which is still about 60, 70 pips away, but these stops are history, I think. Maybe they get gapped. Keep in mind the inauguration Monday and what I brought up about all the executive orders regarding tariffs. So, the markets are girding themselves because they don't know if it's going to be targeted, if he's going to come on strong, if it's going to be lighter than expected. So it's a good time to, not have a lot on going into it and be just like, say, it's an NFP report or a Fed meeting. This is bigger than both of those things. So some market moving stuff's going to happen with those directives, executive orders, and the markets are closed here in the U.S., but FX will be open, and I don't think he speaks until later on Monday. And I'm not sure when all the executive orders will be released and we'll know about it so that it's impacting the market. But, my price chart said that, be prepared for another possible new high in the Dixie. I mean, it's not doing anything great, but it could. Perhaps this is one, this is two, and then this is three up here. And if that's going to happen, just like I talked about, Euro's still the relative strength, okay? Where you have, look at the pound looks much weaker, and Aussie's almost at new lows, so we're going to have our chance under 61, I believe, to attempt longs in Aussie. This was a home run ball from last Friday. This was last Friday. So say you waited for the first down candle. It still got you short on the close at 57.67, 270 max pit, and it went to this moving average. BOJ is a week from today. I believe it's going to be sell the rumor, which is what we did, and buy the fact on whatever they do with interest rates. But to me, this is a pretty important high that we're getting in US dollar yen, and I'm going to be selling rips. A very negative week, much more negative than dollar. See? So that's why it's a preferred short. Excuse me. Also, I was talking about USD NOK, that we had an incomplete pattern there, and you could see it much better on 4 hour. And I think we're going to get that third drive in NOK possible too. So we'll see what happens there. But I'm prepared if the market rallies a dollar, we have a strong dollar move um, to get long euros down here. Okay, and looking for longs in Aussie. Already long some euro. I'll hold it. I'm not afraid of a 100 pip break. Okay, if you are, um, you're probably scalping. This is the position mentality for a turn. I do want to touch on the metals because I think silver's had it. This was corrective action. So from this high, what was it, 32.80, 32.30 to this low. Okay, so 350. 350 from here gives you 27.5, which is pretty close to what I was looking for a long time, thinking that we could trade 27. That's what I think is going to happen here. Okay, so I think that's going to be a great buy. Silver's getting slammed pretty hard, and so are the gold. But I don't think you have a bottom in silver. This is something else I think could make new highs. I've been talking as high as 95, but we'll see. Maybe it's just 93, but this too, which is an instrument, the gold silver ratio mimics a dollar. So rally here in the gold silver ratio, a rally in the dollar. We'll know that the dollar has peaked if we start closing under 108.5. All right, that's actually going to be an add-on signal no matter what it does up here. So regarding yields, I said that we could pull back to 450. We're, still have some room to go there. The bonds, responding kind of like the yen, but we'll see. Uh, I I can't get real bullish on the bonds, especially now. It looks like we're probably going to have a melt up in S&Ps. They had their chance to turn bad. I tried the rally. I'm still going to hold my June puts in the Nasdaq. We failed from 50%. Now it looks like we're going for 61.8. Maybe we're going to have that melt up in the market. I don't have a lot of conviction. That's probably why I bought that much time when I went and covered my puts Monday, S&P puts, and then put out Nasdaq bearish positions here. So I'm going to be underwater. Perhaps the market's going to celebrate this inauguration and what Trump is going to do, and the market goes up and the dollar goes up and metals go down. So that's the way the market is, to me, kind of setting up to do, but I could be completely um, wrong. You know why? Nobody knows. Okay, nobody knows what's in these directives. So, when in doubt, out. We had a great week. It was a banner week in yen. Nice sale in the Dixie at 110. You still have 90 pips in it if you did it to take it. So that's the way I see things. Um, yeah, so we should be heading with $27 silver coming. There's going to be some fantastic buys in the miners. So that's why the miners didn't respond, because they smelled maybe another dollar rally coming. That doesn't look so great, but we take out this low, go to 350, SILJ. We're still way off the lows of 7.5, but looks like maybe we could try 9.5. Here's GDX, and I was postulating that here's the first drive down here rallied, that we almost got to check the breakout again. I would expect us to pull back to 31 again during this time frame. That may be the last bus stop. I don't think I'd get real carried away with the bullishness in crude either. All right. So global demand still is not real strong. We'll see what happens. And, the new administration wants to increase oil supply. Maybe the market will, react to that as well. So we're in a big period of unknowing, and anything you're doing in front of it is really just a guess. And I'll just say that use the same strategy we use in NFP and Fed numbers, not to try and predict the reaction of the market, but let the news flow hit and react to the reaction. So it's a great time this weekend to do all your work when the markets close, have all your levels ready so that you can execute next week. Don't just count your pips, count your blessings, and I'll see you in the